So now let's learn the ISQM1, the quality management for firms that perform the audit or review of financial statement or any assurance related services. What are the components of a good system of quality management? So what are the components that the firm should follow to ensure that their services they are providing is of high quality management? That's what we're going to learn. So as we know, an audit starts from what? And any audit starts from the acceptance of the client and risk assessment. For an auditor and an assurance, we learned this in the base concept videos, that risk assessment is a very important area because it's a risk-based audit. So similarly, a quality management can be assessed only through the firm's risk assessment process. If the firm is not identifying the risk in relation to an audit, or they identified the risk incorrectly, what it could lead to is that firm might accept certain high risk clients, which could lead to a situation where the auditor have to compromise on certain things. So the management is not of good integrity. We accepted the client and we found a lot of issues with the client. So instead of quitting, we try to continue with the audit. We somehow try to fix it. So that itself shows the attitude of the auditor, that once he is in, instead of coming out, he will try to fix things, but it might not work that way. So auditor, if he wants to deliver the audit quality with a high category, his risk assessment have to be pristine and it has to be the best. So the audit quality starts from the firm's risk assessment process. It starts from the firm's risk assessment process. It goes down to the next, which is governance and leadership. Only good governing and good leaders can set the tone at the top, where rest of them follow a good quality audits throughout their company. If the people who are governing the organization themselves are not having higher quality, definitely the audit that they're going to conduct or the audit they're going to do will be of that category, and it will not be of a good quality. So the leaders have to have proper process, proper governance of and take the ultimate responsibility as well as day-to-day operations responsibility by creating a conduct and creating a cultural factor which will help the junior auditors and the managers, etc., to follow through the culture, to take up the culture and embark the journey as when they are performing the audit. Because audit, as I told you, is a very risky job, and definitely if it has to be of high quality, they have to do it with a proper pristine culture that they are following throughout the firm. And if the firm is not showing the culture of quality, definitely the employees who are working in the firm will not carry them throughout their audit process. The third is the relevant ethical requirements. Fulfilling the responsibilities by following the relevant ethical guidelines. IESBS code of ethics, to ensure that the guidelines they follow that the code of ethics, whatever the rules are there, but following is the secondary part. Like we are citizens of India, there are multiple rules we are supposed to follow. We are not supposed to jump the red light, is a rule, but are you following it? We should not spit on the road. Are you following it? Right. So those things are very important for the auditor. So the codes and rules are there. That's one part of it. The secondary part is that are you following it diligently during the process of the audit? That's the second question that you need to answer yourself. So when it comes to, following the codes, are you accepting the gifts and hospitality? Are you, ensuring that the rotation of the audit engagements are happening, the partners are happening, the senior engagement team members, are the rotations are happening or not? That's what the ethical requirement talks about. The third is talking about the acceptance and continuance. Like, even before you accept a client, what are the process you follow? Are you accepting the client after doing the due diligence of the client? After are you accepting the client only after gathering all the information about the client, checking the independence of the client, whether there is any relationship issues with the client? Are you doing that, all of those diligently and following the quality management process that you're supposed to follow? So that's the fourth one. The fifth one is about the performance of the audit themselves. So when you are performing the audit, are you performing the audit with high quality? And in this case, engagement performance comes in the engagement quality reviews. Like in your engagement, where you're supposed to carry on with the audit, have you incorporated certain quality review processes? Like, is there a quality partner who's reviewing the process? Is there a manager who's reviewing the quality partner, who's reviewing the process, etc.? So that is the fourth one. So this is first, second, third, fourth, and fifth one is the quality management engagement performance, and the sixth one is the resources. Do you have enough resources to continue with the audit? So resources means what? Resources are of four categories: human resource, technology, intellectual, and service providers. Human resource talks about the people who we have. Like, let's say, for example, I am a sole practitioner. I have only, one person in my firm. Now, if I want to go and audit, let's say, a big multinational corporate, it will be difficult for me. With one single person, would I be able to complete the audit? No. Which means I have to hire a few people. I need to have enough human resources. I need to have enough employees in my company where I can conduct the audit smoothly. Do we have enough resources to fulfill that? Do we have enough technological resources? Do we have good laptops, good computers in your company, good systems in your company to complete the audit? Intellectual resources. Do you have enough process and policies that you have established in your firm? What are the industry standards? Are you following the industry standards? Do you have enough information that can be accessed by the employees? When I was working in EY we have something called as EY Atlas. You know what is that? Anytime I'm stuck during a case of an audit, like when I'm performing the audit and I'm stuck, I want to have some guidance. There's something called as EY Atlas. I go to EY Atlas and search for the topic. They give standard procedures that we have to follow. Like you are studying in your audit, what are the procedures you are doing, which are listed down in your textbooks. Similar explanations are given in the EY Atlas. So it's a single source of information which will help us to read and carry on with our process immediately. Do you have IT application system which are used by the engagement teams, which can be managed, like audit softwares, automation tools? Do we have that? That is what is called as intellectual and technological resources. Then the last one comes as service providers. Do we need additional people to audit this particular company? What kind of additional people do we need? For example, we have in a client a non-current asset, a building, and the client have actually revalued the building. Now, how do we sign off on the valuation of the building? We need to go for an external valuer who will give us a report stating that the value of the building is appropriate. Do we have in our networking the service providers we can reach out to? Likewise, there are multiple service providers. Not just valuation of building, but valuation of investments of the company. Like a company can invest in another company and the other company is a startup. So what is the value of the startup? We value it using an external service provider. In certain accounts, we need experts who can give us a guidance upon. To give you an example, provisions. You learned this in detail in chapter number 7, but there is something called as provisions for our investments or financial instruments, etc., which follows an expected credit loss model. So let us say, for example, we are auditing a bank. Now, what does a bank do? Bank will seek deposits from the depositors, which is considered as a liability for the bank, but they give, based on the deposits, they give loans to the people. Now, the loans that they are giving to the people are considered as an investment of the bank, because bank will earn income from the interest on loan. They will have expenses based on the interest of deposit. Right? So when there is interest on loan and there is investment income, which is their loans, the loans is considered as per IFRS 9 an investment. The loans they provide, the banks provided to the third parties. Now this investment have to go through a provision. Why? Because a bank will give a loan. The loan that is given by the bank, there is no no surety that the third party might pay back. What if they don't pay back? So based on the risk category, the bank have to create provisions, which is called as expected credit loss. What if the the people to whom we have given loans, the loan availers, they defaulted. In that case, we have to go for an expected credit loss model. That is called as ECL. Now, this expected credit loss model, right, is a provision. And to ensure that the provision is appropriate and the value and the model is appropriate, we need to have an external source who is expert in IFRS and IN, who knows this in detail, to provide us a service report. So that's called as external services. So such service providers, do we have personnel who can give us quality information on time to time to close the audit? All of them forms under the resources. And then comes information and communication. So information and communication talks about the way the auditors obtain, gather and communicate information on the process of the audit. Do they have enough information systems? Are they capturing and processing relevant and reliable information? The culture of the firm recognizes the responsibility to exchange information within the firm. Do they have, within the team itself, are they sharing information with utmost confidentiality? Whether relevant and reliable information is exchanged through the firm and with the engagement teams are communicated externally only when required by the law, regulation or professional standards, which means are the people within the firm maintaining confidentiality? That is called as information, which is the 7th point. So information and communication is aligned to the confidentiality agreement, which is part of the ISBA's code of conduct and ACCA's professionalism and ethics guidelines, is that auditors need to maintain a confidentiality. If they do not, it sets a tone to the culture of the firm. I know when I was working in EY, there was like a team which was completely isolated from all other teams. Like there was a team which was, auditing a client which was having a huge confidentiality agreement. And the team themselves cannot communicate matters relating to the audit to anyone outside the team members. So if I am, another team, I'm part of another team, I'm auditing another client, I go to them, talk to them how the audit is, and they give us information. It sets the tone to the culture. Like the team members are giving me information about the audits of the client, even though I'm working for the same firm. In Big Four organizations, it's very strictly prohibited that even team members do not communicate with another team members about the audits of their company, of their client. That's called as information exchange, and whether it is exchanged only when required to maintain the confidentiality. Because even when you are exchanging confidentiality agreement, we are breaching the confidentiality agreement and exchanging information, in such situation, the quality might get compromised. And finally, we reach out to the stage of monitoring them. So we start with, which is the 8th one, which is monitoring and remediation of the qualities. So we start with the firm's risk assessment process. So even before we start the audit, we identify what are the risky areas for this particular audit where it could compromise our quality. Is there time pressure? Is there pressure from the client? Are the client, integrity persons? The client, are they providing information properly? They are not giving us information on time to time. The partner to whom we are reporting within the entity are not good. What are the ethical requirements? Have we done the due diligence or KYC properly and accepted the client? Who are our team members? Even if within our team members there are junior auditors, then they have to be monitored very severely. What if there is an audit manager who's experienced person, but the senior the juniors within the manager are very new to the firm, so they don't know to carry on the audit well, or they are new to this profession? So what will happen? The audit work will not be of high quality. So that also need to be monitored. So the components of audits, as I told you, are of 8 categories. Just to summarize, it starts from the firm's risk assessment process, goes to the governance and leadership, ethical requirements, acceptance of the client and the client relationship management, performance of the engagement, are they doing it with high quality and maintaining the quality while they're performing the engagement, resources the auditor has in his belt, information and communication, and finally monitoring and remediation.